Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of New York and London coffee markets.
New York coffee. Late last year, a few bullish patterns started to emerge that eventually led to a move up towards a combined resistance in mid-April of this year of the 2012 high at 241.05 and the November 2011 high at 243.40. On the way up, prices punched up through the November 2014 high at 201.35, the 50% Fibonacci lines of the February 22 to January 2023 move at 201.70, and the big 211 to 2019 move at 198.30. The April 2023 high at 204.90, the October 2022 high at 216.25, until peaking just over the November 2011 high at 243.40. The move up happened so quickly I didn't have time to set out topside targets for it before peaking and heading back down. All the way back down to the combination of the bright red declining neckline of the April to May 2022 reverse head and shoulders pattern, currently at 198.05, the 50% Fibonacci line of the big old 2011-2019 move at 198.30. And most importantly, the very slowly rising mauve highlighted medium moving average, currently at 194.80, where prices seem to have stabilized. 5 weeks ago, I had a look at the longer term charts here, and this is what I saw, and I quote, "The key move there was over the 50% Fibonacci line of the 2011 to 2019 move at 198.30. This has seemingly validated the action since September 2022 to date as a possible double bottom Adam and Eve type. Thus, potential targets for such a pattern topside with a primary target X1 in the 235 even area, with a secondary harder to reach target X2 up in the 251.60 area. These are early dates, but that is what it looks looking like right now." End of quote. Well, prices reached the primary target X1 in the 235 area, exceeded them even. However, target X2 up in the 251.60 area has not been reached for the moment, and for now I have decided to retire this harder to reach secondary target from my daily chart. This all leads to where we are now, and I have a conundrum. You see, to me, the action since the start of this year looked like an inverted diving board pattern, with a flat run in, the shoot up and drop, and now the climb out, but inverted. The only issue of this is there's no such pattern. I can't find one. You can have a diving board pattern with a V bottom or a V top, but not with a run up from a fairly flat congestion area, as we have seen earlier this year. This leaves me with nothing other than a V top pattern, which I feel is only half the story. Anyway, the V top stroke inverted diving board pattern is over, and it seems that prices may have created over early May a possible small double bottom pattern. The ambition of this pattern is quite low, only up as far as the 216 even area, because the pattern is small and has only really started moving. I have not labeled it as yet on the daily chart, but I do note how the support for this pattern has emerged from the 50% Fibonacci line at 198.30, the bright red neckline, and especially the purple highlighted medium moving average below, currently at 194.80. However, beyond the 216 area overhead, well, on that I have my reservations. This is quite a hill to climb right now. London coffee. During the process of the market breaking higher from back in December last year, prices stabilized for a while, and in this process ended up with a late January 2023 to early March 2024 bullish half hesitation pattern, between roughly the lesser Fibonacci congestion at 3016 up to the January 3018 to up to the January 2024 high at 3261. In the process of making this halfway hesitation, the late January to early March action also became a small bear channel come declining expanding wedge pattern. 11 weeks ago, prices shot up through the upper bear channel line, prompted by the then rising short-medium moving average, currently at 3604. However, the market then started taking its own sweet time in exploiting the upside. I said 8 weeks ago, and I quote, "It nevertheless still lays out all sorts of possibilities topside." Thus, if we look at the bear channel as a bullish halfway hesitation, then we need to look at 2 points from where to start measuring from. The first is the January low at 2744. The second is from the mid-December 2023 start of the rally in the 2520 area. Thus, for the first pattern, we'd have a potential target X in the 3480 area, whilst from the second origin, you could see up as far as a potential target X1 in the 3700 area. Well up and off my daily chart. End of quote. A few days after my commentary, target X at 3480 was reached, and soon after, the harder to reach target X1 in the 3700 area was also achieved. Prices peaked 4 weeks ago and turned lower once again, this time with a greater force, adding a changeover gap in early May and dropping down as far as the combined January high at 3262 and a slowly rising mauve highlighted medium moving average, currently 3359, where they have once again stabilized. We have seen since prices pull up and out have started to see that perhaps, just perhaps, the market is being corralled in between the mauve highlighted medium moving average below and the short medium moving average above. It's early as yet on this idea, but it is worth considering. As of today, the market has almost filled in the changeover gap up to 35.34. I'll be interested to see what happens once this gets filled in, as we next have congestion up at 36.75 to 37.20, and that isn't that strong a resistance. You would have to wait until the new 50% Fibonacci, untested 50% Fibonacci line of the late April to early May move at 3800 to possibly see something after that. Meanwhile, looking below, you have congestion from the start of this year between 3261 down to 2981, with key levels at 3261, 3155, 3105 and 3055. The only thing to watch out for is in case the action over the last 2 weeks is part of a bear flag, in which case we could easily see those levels being challenged and bypassed. So caution.
Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Service International Limited. And here comes the final important bit.